All right, so this morning, the Consumer Price Index report came in at 2.6%, up from a year ago. That was in line with expectations. Food away from home, almost 4%, shelter, almost 5%, transportation services, over 8%, and medical care, up near 4%. Economists and Wall Street happy with the number, but we all know now the cumulative impact on the American household, well, it only compounds. In fact, we're only the UK has endured more pain than Americans when it comes to the inflation front. And on Main Street, that pain over the past 4 years, well, look at these numbers, folks. I mean, food at home, all the way down to auto insurance. These are things that you have to have. You cannot opt out of them. But I think that was a major, major factor for the election outcome. Now, my next guest has said that high prices for essentials is what matters to Americans and that there really isn't any relief in sight. I want to bring in RBC, their new chief economist, Francis Donald. And Francis, you and I have had this discussion on a number of occasions. And I love it because so many other economists have completely ignored the data. They kind of live in these spreadsheets and not in the real world. And it's now no one can really ignore it, I don't think, after the outcome of the election. What do you see happening from here?
Well, I like a spreadsheet as much as the next economist, Charles, but it depends what we're talking about. Of course, the Fed is looking at year-over-year inflation, and they've probably seen enough progress on that to push them towards more rate cuts, more rate normalization, as they call it. But mainstream Americans are still looking at prices that are over 20% higher than 4 years ago. So depending on which audience you're speaking to, you got to recognize there's a very big difference between what measures we should be looking at. And for most Americans, they are not looking at their cauliflower prices this October versus last October. They're looking at rent 26% higher than 4 years ago. Food at home, 26% higher than 4 years ago. That is the economic reality, and it's hurting low-income Americans much more. They're the ones who spend larger amounts on things like rent, food, and gasoline, where the pain has been the biggest.
Well, speaking of the experts who love spreadsheets, when inflation initially spiked, we had that initial spike, we were told two things. And by the way, we were told these things with confidence. High prices are the cure for high prices. And those shelter cost components, don't worry, they're always a little bit late. And the CPI, we'll see them come down in about 6 months. So far, neither one of those have been proven to be true. In fact, shelter relief is still not even anywhere near close to what we thought it would be or were promised it would be months ago.
Well, at least not compared to what is being measured in the Consumer Price Index. Now, we have other measures of rent. We can look at new tenant prices. We can look at Zillow listings, for example, and those tell us that in real time, shelter prices are declining. But here's what I wish we really would have talked about when inflation was high. First of all, where is the inflation coming from? When it's coming from supply side shocks, as economists say, things like port strikes and tariffs, that's a very different type of inflation that takes a very different cure than if you and I are just spending a lot of money and the Fed's got to make us poorer in order to rein us back. We should have focused on those stories, and we should have focused on the idea that inflation is one thing, but what really matters is, do you have money to pay for these increases?
Right.
So it's wages and inflation together that make the true inflation story, not just what year-over-year CPI is saying.
So Francis, this is the way I see it. They hiked rates in a historic manner. There are a lot of folks out there that make money from those higher rates. Those folks who make money from the higher rates spend it. So you have the top 20% going 40% into consumption. Those consumption data comes in better than expected. The consumption data is better than expected. Keep rates high. And in the meantime, though, below that top 20%, let's call it the bottom 70, 75%, I feel like the Fed, to a large degree, has beaten them. They've won the war against that group of folks. And I always wonder, then, do rich people in America have to suffer before there's any kind of policy that comes to the rescue of the rest of the nation?
Charles, you're getting to the core of my most fundamental key idea on the U.S. economy, which is that there are two U.S. economies. This is why the data seems so confusing. Data that looks like the entire sum of the economy still looks good because wealthier Americans are spending, and that lifts the whole pie. But anything that's survey-based, where your opinion and a consumer confidence data point is just as valuable if you're low income or high income, is looking very weak. The Fed's going to have to make a decision. Does it target the whole? Probably their mandate is inflation for the entire economy, or do they start recognizing that there are those for whom interest rates are too high right now? And that's low-income Americans. That's a big choice and a perspective that the Federal Reserve is going to have to start speaking to a lot more in the next few meetings.
I've got 30 seconds. You also say higher wages would help offset this. How likely is that?
While real wage growth is actually improving, but most leading indicators actually tell us wages in the next 6 months or so are going to decline. But keep an eye on those big union negotiations. Those have been pretty sizable. And if we see less labor force, if we see a decline in immigration, you might actually see some of that worker power coming back in. So for
Yeah.
me, it's not inflation as much as the direction of wages we should really be keeping an eye on.
Yeah. I'd love to see some of those young men who are certainly suffering get back in the labor force, find jobs, and we all start to move toward the promise of America. Francis, thank you very much. Always appreciate it.
Thanks for having me.